There's been a clear shift in the SEC's views on crypto since the election. Under the previous chairman, Gary Gensler, he was very skeptical about crypto and went through many of what he called regulation by enforcement cases where he went after crypto people. And the new administration appointed a crypto-friendly chair, and they've been a lot more open to crypto being marketed to the general public. And this is no different. Yesterday, the SEC issued a no action relief to Fuse Energy for them to issue their tokens to customers that were wanting to participate in a distributed power distribution network. So tokenization is very controversial because the SEC has jurisdiction over securities, and many fintechs are trying to make an end run around the SEC's jurisdiction by engaging in transactions with what they call tokens and claiming that even though they have a lot of the elements of a security, that they're not a security. And the SEC, under the current hands-off administration, seems more receptive to certain strategies and modes of doing business than they were before. So let's talk about this briefly. So in a past life, I represented a lot of energy companies, and it's necessary to understand a little bit about energy before you talk about Fuse. So in the early days of electrification, there were very small power plants everywhere. And then eventually, because of economies of scale, power generation moved to large central generation, and it would move out to the power users. Because the technology has gotten better and because the demand for electricity has gotten so much higher, especially because of things like data centers, and also because of credits for renewable energy, there's been a lot of interest and activity in distributed generation. So it began as people putting solar on their house, and they would get electricity from the grid at part of the day, and when their solar panels were producing more than they can use, they would sell it back to the grid, and then that expanded to other things, such as batteries. You can store energy during the day when buying it is cheap, and you can put it back into the grid at night. Something called peak shaving, where certain high use electricity things are curtailed during certain times of the day, and then you do them at other times of the day. A power plant like this, which produces excess heat, and you can use that to power turbines and sell that back to the substation. And then you have this standalone thing, which is something that produces its own power and doesn't sell it into the grid. And sometimes entities like this will want to get in on the tax incentives and things like that, dealing with renewables. And so they will enter into something called a virtual power purchase agreement, which involves some of these parties, but it's purely financial. And unless it's structured exactly right, it's probably a swap and subject to the CFTC's jurisdiction. So there are a lot of lawyers that deal with virtual purchase power agreements and trying to structure them in a way that you get the tax incentives, but you don't get the regulatory burdens. And as a former CFTC attorney and former energy attorney, I can tell you that it's very difficult to draft that in a way that where you kick the field goal between the two posts. But anyway, this is what Fuse Power is involved in. So what they want to do with their token is encourage people that have these power generation here to be part of their network and agree to sell their excess power into the grid, and that they would be issued these tokens. And with these tokens, they can later purchase electricity back or discounted goods such as EV chargers and things like that Fuse would sell. And rather than keeping track of how much power they give to the grid and how much credits they get on a spreadsheet, As an accounting notation, they are just going to issue tokens to the people, which I said they can use to buy things back from views, such as discounts on their goods and services, or they can sell those tokens on the open market, just like a security. And that's why this no action letter is necessary, because it has many of the elements of a security. And if you look at this SEC release about investment contract analysis of digital assets, you'll see that the most common test is the Howey Test by the Supreme Court, which is investment of money in a common enterprise with a reasonable expectation of profits. And it seems to tick a lot of those boxes. But as I said, even though this interpretation was issued last year, there's been a change in administration, and there has been a change in leadership at the SEC. And so they are a lot more lax when it comes to looking at things like this. So here is the no action letter, and it is very brief. It is only 2 paragraphs. And as I've said in prior letters, unlike the CFTC, where everyone needs their own no action letter, you can't rely on somebody else's no action letter. If the SEC issues you a no action letter and your facts match the same facts of the requester, you can use that no action letter without having to write in yourself. So not only does this open up tokenization for Fuse Energy, but any other provider that wants to do this type of distributed power generation and issuing tokenized credits instead of accounting notations, and those tokens are freely tradable, now they can by relying on this no action letter. So since this is very short and doesn't tell you anything, we have to go to the original letter to see what was going on. And as I said, this walks through what the distributed energy infrastructure is, and I sort of went through with that on the infographic I showed you. And it's easier when you see it in a picture than to read it. And here it talks about the token that they'll issue and the formula for pricing. So if you have solar, for instance, there's something called a duck-shaped curve. For power, and kind of looks like this. And at certain times of the day when everyone is using electricity, there's plenty of power on the grid, and then other times there's not. So if you live in Florida or California, where everyone has solar and it's all putting electricity into the grid during the day, and there's more supply than demand, then the price will go down. And at night, when there is no sun, the demand for electricity goes up and the prices go up. So what this would do is, if you are pumping solar or wind or anything else into the network at a certain time of day, you would get a certain price. And if you were putting in at a different type of day, you get a different price. And so if you have solar and a battery, for instance, you wouldn't want to sell it in the middle of the day when the prices are lowest, but you can store in the battery and then sell it at night when the prices are highest, and then you could even buy it back during the day when prices are cheapest. But that's basically what it is. And as I said, instead of giving you a credit the way Con Ed would, an accounting notation or anything like that, or cash, they are issuing these tokens. And you can use these tokens to buy things from them, but what makes them interesting is that you can also trade them on the secondary market, just like you could for Bitcoin or Ethereum or anything else. And so that makes it a lot like a security, because if you have a video game and you purchase tokens in the video game for in-game use, those aren't tradable, so those aren't securities. But if you receive something of value that you can sell, that starts to look like a security. And if the value of that is dependent on someone like Fuse doing their job well, and the more it's worth would be dependent on the better job they're doing, that starts to look a lot like a security. And there are clear use cases for crypto tokens that are not securities. So if I own a Picasso painting and I want to give 10% of it to each of my kids and 10% of it to my aunts and uncles, I can just sign a contract where they each own part of it, or I can tokenize it and issue these tokens. And if they are on a public blockchain, that's one thing. And if they are an accounting notation somewhere else, that's different. But what I've done is take something and tokenized it. But that would not be a security because that is something whose value does not depend on the efforts of others. So whether the value of a Picasso painting goes up or down does not depend on me, does not depend on Picasso, who's dead. It's purely random. And the same thing with oil or gold. If you have a bunch of gold in a warehouse, you can issue people tokens on paper, and these are called depository receipts, and they've been used in the commodities industry for a long time. But if you didn't issue these paper depository receipts, if you issued these tokenized things recorded on a blockchain, which people can look at online, that's a token. Is that a security? Probably not, because that's a commodity. And as I said, whether the price of gold goes up or down does not depend on anything the guy in the warehouse does. But, if you issue tokenized shares of a company, then how is that different from stock? It's probably not, because a stock is a fractional ownership of a business, and a business is something that is going to succeed or fail based on the efforts of others, unlike a commodity like gold, where you can't control it, or a unique piece of art which is not fungible. And so because this is a power network, and the amount that your tokens would be worth would be based on the success or failure of the efforts of others, namely Fuse Energy, these tokenized interests, which are tradable outside of Fuse, would look like securities. So it's different from in-app tokens in a video game, because you can't take those tokens out of the video game, but this you can, and you can sell it to somebody else. So it does look a lot like a security, but the SEC said that this is a no action letter. They're not going to go after you if you do this. And as I said, with SEC no action letters, other people that have facts that match this can rely on this. So if other people want to issue tokens for these decentralized energy networks and distributed power, now they can by using this and sort of operating within these parameters. Now, as I said, one, this is an SEC no action letter, and even though this is an SEC no action letter, applies to everyone. If there's a change in administration, no action letters can be withdrawn at any time. Two, I mentioned before about virtual power purchase agreements, and how if they're not structured correctly, they're swaps. And just because the SEC gives you a pass on this does not mean that is not a swap and subject to the CFTC jurisdiction. And also, recently a case called recently a case called Chevron was overturned by the U.S. Supreme Court, and it used to be that agencies dealing with a specialized statute, like the IRS dealing with the tax code, or the SEC dealing with the securities code, would be entitled to what they call Chevron deference when interpreting their own statute. However, the Supreme Court recently overturned that, and so if somebody were to sue because they participated in Fuse and lost money, Fuse could not go to court and say, well, these are not a security, and that's why I didn't have to comply with the SEC's registration requirements, because I received a no action letter. Because there is no such thing as Chevron deference anymore, it's sort of like Wikipedia, where any judge can decide to change and interpret anything any way they want to. And so if someone were to sue, and even if the SEC were to say that we don't think these tokens for distributed energy production and consumption are securities, just because they're tokenized, a judge could come in and say, well, it doesn't matter what you think, because the SEC is no longer entitled to Chevron deference, and therefore, since the SEC is no longer entitled to Chevron deference, a judge can look at this and say, tokenized interests that look like securities are securities, whether they are recorded on the blockchain or they are in paper. and they have to comply with the registration requirements of the Securities Act of 1933 and 34. Anyway, that's the ruling. Anyway, that's the no action dealing with Fuse Energy and tokenization in crypto. If you have any questions about that, just leave a comment below. If there's videos you'd like to see, leave a comment below. My name's Pete. I'm an attorney with 25 years experience in the finance and energy markets. And if you'd like to work with me on a consulting basis or on a legal basis, leave a comment below or contact me through my website, turnkeyfamilyoffice.com. And since I'm a lawyer, I'll give you the disclaimer. I'm a lawyer, but I'm not your lawyer. And everything I've said here is for educational, informational purposes only and does not create an attorney-client relationship between you and I. If you have questions about your own legal situation, discuss it with your own counsel. And like and subscribe so you'll see more videos like this in the future. Have a great day, everyone.